Let's get across today's market moves with Edward Boyd. Ed, those inflation numbers, poof, did the market go down after that?
It sure did, Ross. Look, fair to say the inflation numbers took the market by surprise. ASX 200 opened lower this morning, then those losses accelerated at 11:30 once the stats were released. Consumer discretionary sector was the worst performer. Tech stocks lifted. Market finished the day. It did recover a bit, finished the day though down 0.7%. Now, top three companies were all tech stocks. Data intelligence business Nuix, machine learning company Appen, and synthetic skin maker Polynovo all jumped pretty strongly. A lot of companies lost value today. Collins Foods, which was one of the top performers yesterday, slumped sharply. Retailer Harvey Norman have sold off too. And car dealership business AP Eagers was another discretionary stock that got crunched. And here's a look at the Aussie dollar, which jumped today after those inflation numbers were released this morning. You can see decent increase for our currency. $1 is now currently buying 66.86 US cents. And Ross, that is markets.
Okay, Ed, I want to talk to you about this inflation number today because it was pretty significant. But the one thing you and I were watching was a measure of just how the odds of a rate rise. And this is it. I want to show it to you. Before you got to this decision here today, the 4% inflation rate, the odds of a rate rise by the market were put at 11%. Immediately afterwards, and even now, it's jumped to 33%. That's the key to the market sort of really understanding where this is going, isn't it?
It sure is, Ross. It's tripled just in the past few hours since the numbers came out. Puts a lot of pressure on the Reserve Bank. We've even seen that figure go as high as 35% as well. So obviously this is all due to inflation.
So the fact of the matter is, doesn't matter which way you slice and dice it. And I heard the Treasurer today trying to say, well, actually, if you take some things in and take some things out, it's actually going down. But if you look at the general rate, it's going up. And that's one of the keys here, isn't it?
The trim mean is the one the Reserve Bank looks at very closely when they make their cash rate calls, and that's actually accelerated. It's gone from 4% the previous month up to 4.4% this month, and that's the worry here for the RBA.
So the trim mean is the one which is really important here, and this is that particular number. The Reserve Bank will be watching, but we should also remember that the Reserve Bank doesn't meet until in August, and there's another inflation rate that comes out before then.
There's the quarterly CPI for the June quarter. That comes out on the last day of July. And then the RBA have their first board meeting in the first week of August. So they're going to have a few days to digest those figures before making a call.
Let's show people very quickly what prices are going up the fastest. Have a look at this one because you can actually see that it's insurance. It's things like housing.
Insurance, health,
you can see
education.
Education is there as well. And one final one, and that is the banks themselves. Are they changing their view on when the first interest rate rise or move will be?
They sure are. We've seen a couple of movements in the past few hours here. Notably, we're seeing some banks pushing back the rate cut until you can see there mid-2025 for NAB now.
It's going to be fascinating to watch this. Thanks so much, Ed. Appreciate it very much.